Mark Selby, how are you, sir?
Very good, Mr. Matthew Gordon. How are you?
I am good. It's kind of crazy out there for the world of uranium, but it's also looking a bit crazy for the world of nickel. I'm not quite sure how to read it. What's happening?
Oh, it's as I said a few weeks ago, before Christmas, that we were likely going to see some 5% moves, and we did see those to the downside. So we're trading in the almost 17,000 range, in mid December, and then we've bounced off $16,000 a ton. We actually broke it for a little bit one day, but we're now back up into the mid 16,500 level. So the key thing there is that sort of final, for lack of a better term, puke lower has been now driven the capitulation, which you'd love to see, and is what you need to see to be confident that we're seeing the bottom set in. Again, what I said in the forecast for the year, and what said is that either post calendar New Year, post Chinese New Year, we should start to see a move higher in the nickel market. And this kind of news, although it's again, it just seems like a deluge of negative news coming at you. That's exactly what you need to be able to start to move higher. So perversely, it's actually a good sign.
It is perverse because I think it's worth trying to understand the why it's happening and the why it's okay. So run it by me again in terms of what's holding the price down here, and then tell me why it's going to be okay, Matt.
Yeah. So for those who saw our forecast for the year in our last session, what is really talking about there is we've had this massive amount of destocking on the battery side. So while underlying usage has gone up in the EV sector by 40%, because they were destocking inventory, we only actually saw about a 3 or 4% net call on nickel units from the EV sector. We're going to grow again another 30, 40% this year. So the potential for this massive restock is huge. And I think it's going to kick into gear post Chinese New Year. So that'll drive double-digit nickel demand growth, which no one's forecasting. So that's the fundamental driver. That's there. And then what we've seen with this capitulation is a bunch of higher cost supply come off the market. So that's what sets the stage for this turning point.
Okay, and I know we talk about it a lot, but I think I'm always conscious that there's lots of new people, certainly on this particular show, which is all good news. New people kind of coming in and obviously may not have the time to go back and look at older episodes. I think I saw it as recently as this morning on a YouTube comment, which is like nickel is awash. It's everywhere, So the nickel market is awash with product, and we are going to be swamped by Indonesia. We're going to be swamped by the Philippines. It's all over, folks. So again, just give us a quick summary on why that perhaps may not be the case.
So the other piece is in terms of these reported surpluses, because again, from a bunch of other physical indicators in terms of premiums, there doesn't seem to be as much inventory overhang as those surpluses would suggest. And where I believe these quote surpluses are actually initial first fills for the whole battery supply chain, from precursor to cathode to battery to EV, and each one of those new plants needs inventory to start up the plant, and then inventory to then distribute to their customers. And the way people calculate the numbers, they kind of leave out all of those first fill numbers. And because we're building so many new plants for the first time, those turn into pretty material numbers in terms of the overall balance. So yes, we're in surplus. We're not in surplus for, sort of 200,000 tons, sort of 6 or 7% of the market. I think we're in about a 2-ish% surplus. So then when you start to see the kind of cuts that we just saw announced over the past week, I think that in combination with the big surge in demand, that'll come after Chinese New Year, is really what's going to sort of, propel the market through the balance of the year.
And it's kind of worth reminding ourselves that it's like small percentage moves kind of affect the market. So EV is in a kind of fairly it's in a learning phase, right? We're going from ICE to electric vehicles in a very short period of time, and I think most people in that sector are kind of learning on the job, as it were. And although stainless is a big chunk of this, those small percentage moves on the EV market, perhaps having a they're trying to work things out. So a little bit of that in there as well. But like, okay, so Mark, there we go. So there's some market data for people to kind of get into. You're positive about the future, and perhaps we're sort of seeing the bottom at the moment. We need to look at Australia because, again, some of the signals coming out there could be confusing. Should we start with Wyloo? What's happening there?
Yeah, no. That's the part. If you looked at the headlines, as a nickel person, you might be slashing your wrists at this point. But so number one, you had Wyloo. They bought Mincor, which is operating 3 mines in the Kambalda region, and a couple of them literally just restarted in the past 18 months or so. They've announced they're going to put all those mines on care and maintenance, by the springtime. Again, Cassini is one of the first new mines in that area, and it's 1 million tons of 3% nickel. Again, when we talk about high grade, these are high grade mines that are getting shut down because they're unprofitable at today's prices. So just another data point, on that high grade argument we always have.
Before you close off on that one, I mean, the other side of the argument, there are low grade mines which are operating efficiently and economically, right? So it's not a case of high grade can't work, nothing else can work. It's a case of all the variables associated with Cassini have, they're in a bit of trouble right now. Karen mentioned this is, let's see what happens.
So these higher grade, smaller, high grade Kambalda mines have been like shut down and open up, whereas Mount Keith, which is the grandparent of these big bulk tonnage ultramafic nickel deposits, shrugging along for almost 30 years now. So again, it's real world data to refute unfounded statements about what matters.
There you go again with your facts.
Yes, I know. Damn it. The other part with Mincor closing those mines down, BHP runs a concentrator in the Kambalda area. They bought companies in the area sell the ore to that concentrator. So that basically, with that going into care and maintenance, that effectively closes off a route to market for any other supplies that might be in the area. You can actually ship it even further up to their Leinster mill, but that's a couple 100 kilometers away. So there's not many operations in the area can really afford to do that. So that's 2 sets of operations going down. First Quantum operates the Ravensthorpe. So this is one of the early 2000s generation of HPAL projects, and they are suspending mining. So they have low grade stockpiles, so they're going to continue to process through the plant, but to save some cash costs, they've actually shut down the mining there. So that'll result in a cut in production because it's lower grade there. Then the other piece is with these things happening in the nickel market, again, BHP splashed out $7 billion for Oz Minerals. The read-through value for their nickel copper project that they bought, was over $2 billion. And so they've indicated that they might be taking a write down. We'll find out in about a week or so when they publish their financial results for the half year. And then the other piece of news that came out was Cerro Matoso is run by South 32, which was a spin out from BHP of some of the smaller non-core assets in the mid 2010s. They're looking at, in terms of strategic, options for that operation. It's a 40-year-old laterite mine. Laterite deposits are relatively easy to high grade. So, not surprising, that this is something that's sort of starting to float its way up the cost curve and may make it difficult to do. So again, when you add all those together, there was a story this morning, the Association of Mining Companies, mineral and exploration companies in Australia is asking the Aussie federal government for help on the nickel front. Yeah, again, you add those up, you think, oh, it's very, very dismal. But again, the majors are always behind the curve. They are always, closing down. And again, the fact that they're closing them down, taking some marginal capacity out of the market, is this kind of thing that sets a bottom in, and sets things higher. So, Chinese New Year is still a few weeks out here, but, will be very interesting to see what happens through February. And again, I think we'll start to see the first signs, of the market turning.
Okay. Again, a little bit more detail, if you don't mind. When you say things like, the majors tend to be behind the curve and production cuts, etc. Are we saying that, and the fact that they potentially help set the bottom, as it were? to an outsider looking in, it just looks like, well, jeepers, everyone outside of Indonesia is struggling with their nickel projects. Perhaps just keep banging, as we keep banging on that narrative. Indonesia will control the world and will control the supply. If BHP can't make it work, if Wyloo can't make it work, if First Quantum can't make it work, South 32, what hope is there for the rest of us?
So most of these mines are basically, in the case of the sulfide assets around Kambalda, are small scale. Yes, they're high grade, but they're small, high cost, 30 plus, in some cases, 30 plus year old mines, that, have seen their best days. So it's important not to take what happens at the tail of the cost curve and then sort of assume that is what's going to happen, across the entire cost structure. So again, the big bulk tonnage potential things like our project with Crawford, FBX Nichols with Dakar, those are have multi-decade operations, that have a bunch of structural advantages that can help make them low cost, that they'll be able to continue to operate and generate cash, throughout the cycle, including at kind of today's prices, which are forcing, people to close, some of the mines out there today.
Okay. Is there good news? Are there green shoots?
Yeah. So already, before, again, I don't think it's going to really kick into gear until post Chinese New Year, but, already, despite all this, negative news in the market, we have seen a small increase, a couple percent over the last few weeks in stainless steel and NPI prices in China, off of the bottom. There's some mention of restocking beginning, in the EV supply chain. So, that's very good news. And, again, there's a bunch of other stories coming into year end, and some other stuff that came out this week about, Ford cutting production of their F-150 electric truck. And if you looked at the headlines, you think, oh, this whole EV thing's, been hyped and it's all going to roll over. But, again, let's talk about the facts. So, for the entire planet, up 31%. In the month of November, year over year, and for a year to date, up 38%. The big thing from a nickel consumption, again, are the big cars and trucks in the U.S. And, the U.S. ended up 50%, for the year, with the month of December up 42% year over year. So, again, don't extrapolate a few car models that might be overpriced relative to what's in the market, in terms of, what's going on with the EV sector. So, those are all, again, some early green shoots and some, demonstrating the underlying momentum, that I think is really going to carry things as we go through 2024.
Okay. And I'm sure we'll hit on some of those topics, and we'll keep, keep close attention to some of those numbers and see how they continue to move. Right, bit of company news. I think we're going to rip through a few regulars and maybe one new one to me. Where we're starting with?
Yeah, so SBC Nickel. So this is a smaller company that consolidated, effectively Vale and themselves own two halves of the same deposit. They got a deal done with Vale a few years ago. They've just completed a drilling campaign. Again, very, very solid exploration team there, and came out with a good resource. It's of open pitable 19 million tons at 0.42% nickel. They have some copper in there as well, so that almost 0.6% copper equivalent. So again, and they've got two mills in the region there that they can ship that to. So good work by those guys in terms of getting that over the line. The other good chunk of news is Centaurus. Their project is, again, one of the handful of larger scale sulfide deposits that can move forward. So they got confirmation of what's called the Plan of Economic Assessment. It's another step in the permitting process. So they're one step closer to getting their final permit to get going. So it'll be nice to see that continue to move forward. Talon, again, continues to step out, away from their main resource area. Fairly splashy. Some picture to core in their last release. So they had 6 meters at 2.9% nickel and 1.7 copper. With including another 2 meters of that came in at almost 7% nickel and 4% copper. So that's great. Unfortunately, the other two holes not quite as splashy as that, but again, it's nice to see some grades showing up. Visionary, that's the one out in Wyoming. This is completely new greenfield area. So Still very early days. They hit some nickel, a little lower grade, a little narrower than what's there, but as I said, there's very early days there. So I would one to keep an eye on. The other one that's a little bit new, Archer. They picked up the Grasset deposit, which was a discovery made by a company called Balmoral about a dozen years ago, and so they're testing some of the extensions. Came up with some pretty decent grade, but a little bit narrow, and given the depth that's there. But again, be nice to see that one move forward, because that was one of the few new discoveries that we've seen in the last while. And then finally, there, premium nickel in Botswana. We've talked about them before. Some decent results that came out. They provide the widths. We can't tell the true widths right now. They don't provide that. But again, they're okay grade, but they are deep. And again, contrast them to the kind of grades we see at Mincor, and which mines are going on care and maintenance. So again, just grade is only one variable in the whole story. So just keep that in mind as you're looking at companies' results.
Right. Okay. And then just obviously looking at some of the names that we've mentioned, there's a lot of kind of like companies have been hit hard last year. The valuations just aren't there, and obviously it's getting harder to access cash for some of those companies, which are not necessarily everyone here, but some 2-3 year lows. When does the sector start to become interesting to the money? And obviously you've obviously been through a phase. So Agnico Eagle, Anglo American, you've got Samsung in there. You found it easier to get. You found it not easy. I'm sure it was hard work, Mark. But you have gone through a process which has attracted and got people over the line. So that's to be commended, right? There's something in what you are showing and talking to them about that they believe. For the junior market more broadly, it seems a little bit more difficult. Now, I guess your Inco Falconberg's background helps you understand the market overall. What have these guys got to do to become relevant, become noticed in terms of where they get their money from other than retail?
Yeah, I think, to be able to, demonstrate the potential of some of the exploration, that they're looking at. Again, if you can, again, you've got the companies that are promotes that, take 2 historic holes from 15 years ago and drill 1 new hole in between them, and put out a flashy result. Again, in an up market, that's great. That gets some attention. But the reality is, some of that institutional money's going to be smart enough to go, okay, well, you actually haven't, you're not moving the needle in terms of what the potential looks like, or showing me what the upside would look like. So, the key thing with these guys is, again, do the work with the budget you have, to try to be able to clearly demonstrate, the upside potential. So if you have those funds, that do have a view on a metal, then it's helpful. Again, the sad reality is, gold, silver, copper, most fund managers are quite comfortable, playing around in that space. There are some, that also, dipping their toe back into uranium whenever uranium has a day in the sun, and which we're going through now. But then, unfortunately for the rest of the periodic table, a lot of those guys only pay attention when it becomes a flavor of the month kind of metal. Lithium was that a few years ago, up until probably 6 months. Lithium's now come off, and so part of the excitement, for me, and I think for the nickel sector as a whole, is, again, once we get over, once we start to see this move higher, off a low bottom, it hopefully starts to create the momentum, starts to counter some of the negative narrative that we've seen for the last 3-4 months, and then creates that, that trajectory where people say, okay, I'm okay to start throwing some cash around to some earlier stage opportunities, because I think we're, back up in another 12 to 18 month up channel from here. So, that's, if I sound excited about, what's coming post, what I think is going to come post Chinese New Year, it's for that reason, because, again, that should start to see some dollars sprinkled back into the nickel sector, which has been beat up pretty hard over the last 18 months.
Right. And do you think in terms of decision making in the North American market, which obviously, holds huge sway?
Yeah.
in the sense of the demand drivers. Do you think that the elections are going to hold things up? Are we going to be is the market for nickel are the equities markets going to be I guess under some pressure from people waiting to sort of see the outcome of the 2024 election?
No, I think I would say one of the very, very few bipartisan issues in the U.S. that both Republicans and Democrats agree on, is about getting China out of the supply chain for critical minerals. And so, as Donald Trump says, China, that they're pretty keen to get. He's pretty keen to do that. So he may do it differently than Joe Biden in terms of sort of the corporate subsidies that he's got involved as part of the Inflation Reduction Act. But in terms of the overall objective around, getting China out, he is there for sure.
Well, okay, Mark, I better let you get on because I know you got a busy day and lots to do. So we'll see you next week. Okay.
Sounds great, sir. Thanks.